Talk Showcase on Brownfield. I'm Amy Simpson, and we're here today with Rod Hebrink with Compeer Financial. So Rod, let's start talking a little bit about some of the key financial learnings from this year with the coronavirus pandemic. What are some of the takeaways?
Well, I think one of the big takeaways is the need for resiliency in all operations. And part of that resiliency comes in the financial capacity of individual farm operations or agribusinesses. And we've always encouraged good liquidity in organizations to be able to adjust as needs dictate and circumstances change. And there were a lot of circumstances that changed this year. I think it also pointed to good risk management skills. And we've emphasized that for our producers for many, many years. But we saw some of the really significant impacts of this earlier in this year in March and April as COVID began ramping up. Major price impacts across all of the commodities, all of the livestock and dairy. For those producers who'd locked in their commodities and locked in prices, well, they kind of were able to work through that period with less of an impact. And prices have since subsequently recovered, and we're very pleased about that, and certainly our producers are as well. But it's one of those key lessons to make sure that you've got some of your marketing in place and taken care of so that you can weather those variabilities that come throughout the year, even if we don't really expect them to include COVID-type events in the future.
And, what are some of the trends that you're seeing in Midwestern agriculture, and how can farmers kind of navigate those uncertainties in the market?
It's been a remarkable year. As I'd mentioned, last March and April, we were looking at an outlook that was really pretty dismal for many of our commodities. And since that time, there's been a lot of areas that have recovered. Dairy prices have moved from a low of $13 back up into the $20 range. We were concerned about even the ability to have a place to go with livestock, whether it was hogs or cattle, and that's largely been resolved. And so I think that's been one of the uniquenesses, and again, the ability of so many firms all along the food chain to show resiliency, to adjust rapidly to the circumstances. Because if you were, for example, a dairy processor and producing a product that was going through the food service industry, well, food service shut down. And so you needed to rapidly shift and be able to find new outlets for the products. And we saw companies all across the food chain and input providers make those adjustments on the fly. I think adjusted more quickly than any of us really expected. There's a lot of learnings there in terms of the impact of the supply chain, how dependent you are on any one source for marketing or for raw materials coming into your operation, and the dependability of the partners that you're doing business with.
And as you mentioned, it's really been a remarkable year. How has Compeer continued to work with customers and people in rural areas throughout this pandemic?
Well, we've made a number of changes, and we are an organization that's built around strong relationships with our clients. It's built around the idea of responding to individual circumstances, because all of these things that we talk about more broadly, well, they're the general outcomes. But we try to remember that we have 40,000 individual clients, and all of their situations are different. And so we've worked with clients on deferment programs, if that was necessary, interest and or principal payments being deferred, homeowners as well in deferring those payments. Another attribute of our programs that has been very, very helpful for producers is the ability to make what we call conversions in the interest rate of the loan. There's kind of an optionality in there. So as interest rates fell this year, we were able to reprice over $5 billion of loan volume to more than 1,600 loans, saving those clients about $40 million in interest expense annually. That's a huge adjustment that benefits those clients. And so we're really pleased to be able to offer those programs, as well as to take advantage of programs like the Payroll Protection Program. We financed over 3,200 loans to clients, many of them very, very small. And as you know, those loans are being forgiven by the Small Business Administration, and they made the difference between being able to make payroll and being able to, if not lose money, at least get to a break-even position for many of those clients. So those are some of the ways that we've been stepping in and helping our clients over the last 8 months.
That's really great. And if people want to know more information about some of those things we were talking about, where's a good place to send them, or a website for more information?
Well, They can certainly go to Compeer.com and learn all about those programs, or call into our contact center that would be shown on our website. Or if they're familiar with any one of our loan officers, contact them individually along the way as well to get more information about the programs that we have to support agriculture and individual producers.
That's great. And then before we end, anything else you can think of we didn't touch base on you want to make sure is mentioned?
You know, it's been, as we talked about earlier, a remarkable year. And I mentioned in April, we really were concerned about those long-term impacts. But the combination of the adjustments that producers and agribusinesses have made, the stimulus programs, whether it's been the payroll production protection plan or other, the CFAP payments that came out of the USDA, they have made a huge difference in the profitability or limiting the losses for agricultural producers. And so the surprising part of that is, for us as a lender, is the credit quality across the portfolio is as strong today as it was a year ago. And I don't think when we looked at the economic adjustments that were taking place in March, April, and May that we would have ever forecast those kinds of results. So it's good news. Ag income is going to be up overall in 2020, in large part due to those various stimulus and government programs. But it sustains those producers, and they can go into 2021 with improved price levels and improved prospects, and probably the best scenario that they've seen for the last 4 to 5 years.
Perfect. And that was Rod Hebrink with Compeer Financial. I'm Amy Simpson with Brownfield Ag News.